Hello and welcome back to Entrepreneur Money Stories. Today I am welcoming Hilary Hendershott to the show. Hilary is the founder of Hendershott Wealth Management, a leading financial advisory and profit consulting firm for women and couples. Hilary's mission is to motivate women and their loved ones to be financially empowered and to thrive. Her profit consulting programs have enabled business owners to finally take control of their money, learn healthy financial habits, and grow their individual wealth by millions of dollars. Hilary is the host of Love Your Money, formerly the Profit Boss Radio, a weekly financial podcast where she and her guests offer inspiration and actionable advice. I love Hilary and I love her podcast. I was on her show a couple years back, so we'll link that in the show notes as well. Here's my conversation with Hilary. Hilary, welcome to Entrepreneur Money Stories.
Happy to be here.
We were jamming up before we hit record. I think we probably could have talked for a few hours.
I know. But both being money professionals and both being women, I think we have a lot in common.
Yeah. So we have a lot to say today. So we'll try to keep this to the point and really clear and concise for you guys. We won't throw out too many accounting finance terms for you, but tell the audience a little bit about who you are and what your mission in the world is today.
Yeah, so I'm Hilary Hendershott. I'm the founder of Hendershott Wealth Management. We are a comprehensive fiduciary financial services firm. We work primarily with and for women, and we also do profits consulting. So we're profit first professionals, and I'm also the host of the Love Your Money podcast.
Yeah, and I love your podcast. It's a great show. So if you enjoy this show, you will definitely enjoy that show.
It's all born of my own personal money experience. I am the owner of every money mistake you can imagine. I've worked through that at this point, but I'm not afraid to talk about it.
Well, I appreciate your vulnerability around that. Could you tell the audience a little bit about what's different about your services and the way that you guide your clients through investing? Because I think that that's really important to touch on what makes that so different.
Yeah, I think, if you're to listen, and through truly no fault of your own, if you're to listen to the messages coming out of the largest marketing force about investments and wealth building, that certainly being Wall Street, or the financial news media, which is constantly in your ear, you would think that, and I hear things like the stock market is a Ponzi scheme, or you constantly hear people saying, oh, this industry is going to crash, or this sector is going to do better next quarter, right? And so the idea is you need to guess and feel and intuit what's going to happen in the market, but that it's fundamentally a very dangerous place to have your money. And I am sorry that is, unfortunately, we are all sort of informed by these, and in some cases, I would use the term bad actors. I mean, ultimately, the financial news media, if they told you the truth about the stock market, you wouldn't tune in tomorrow because it's actually a very peaceful, profitable narrative.
The news cycle for a reason.
I know. And I do have friends in the media, so I'm always very careful. I always say the national financial news media because I sometimes I hear what they say and I just think, you guys are hurting people by scaring them, right? When the truth is, we at this point have a ton of data about the stock market. There's a lot of people, smart people working very hard to learn how to interact with the stock market. And we know a lot. For example, one of the things we know is if you had put $100,000 into large American companies that were trading at a discount 100 years ago, $100,000 would have turned into $2 billion. Wow. Now, since 1927 to 2023, that's 96 years. So admittedly, even you or I, Danielle, we're very young, but we maybe don't have 96 years, but we would each take half of that, right? If we could. And that really is why they call compound returns the eighth wonder of the world. And all you have to do to get those returns are buy a low-cost index fund and not sell it. And I'm oversimplifying, like don't go out and just buy any index fund. It matters what you own and in what proportion. But I'm not oversimplifying as it regards costs or the simplicity of the behavior that earns those returns. And owning pure index funds is not appropriate as you approach and are in retirement. You need some other lower volatility investments in there. But the point is, you don't need to guess. Even the professionals who try over the longest time periods, 10, 15, 20 years, you're talking about a 90% failure rate. And that comes straight from the Standard & Poor's organization. They do a scorecard every year they call SPIVA. And not only that, but the Wall Street active folks who are trying to beat those indexes, they charge sometimes 10 and 15 times as much. So investing is like one of the only realms in which, there is no Neiman Marcus. You walk into Neiman Marcus, you expect to pay more and get more. I'm staying at the Ritz for a reason, but when it comes to investing, even the Morningstar organization is on record saying the biggest predictor of high returns is low costs. And sort of couple that with the idea, nobody knows when the stock market is going to go up or when the stock market is going to go down. Very interesting. This past year, we're in August of 23 right now. I would say coming up to this date, and maybe with the exception of the last 45 days, because the stock market's had a huge tailwind, but I've been hearing the stock market's going to crash. The stock market's going to crash. It's going to be the big, I had a person say to me, this is another 2008, right? And I said to these people, nobody was talking about it being a 2008 in 2008, right? As soon as people start predicting stock market crashes, I have this intuition, we might be looking at a bull market, right? People just don't know. So the good news is you can set it and forget it if you have the right portfolio. I hope that answers the question you were.
That does answer it. And I shared this with you before. I think one of the number one things that I've heard you say, I believe you had a whole podcast episode on this, so we can link it in the show notes, but finding what your values are when it comes to investing, and stop trying to time the market, right?
Right.
I'm always shocked how many people who I hear who are very successful business owners, very, very smart people, who think that they can play this gambling game with the stock market. And to me, it just seems so dangerous. And
well, it's not evidence-based, right? It's like, I don't know. I don't want to offend anybody by talking about the healthcare system. But for example, I was in a group, a circle, maybe 10 business owners right as the pandemic started in 2020. And they came together. I mean, you're talking about March 2020. We barely knew anything about the virus. Like, we didn't have a lot of data. So they said, what are you doing with your investments? And they went around the circle. Oh, I'm doing this. I went to cash. I'm doing this. And I said, you guys, what you're doing is the equivalent of randomly sharing how you're changing your prescription medicines without anyone's medical advice or opinion or any research into it. Like, that's what you're doing. The fact that we're having
love that analogy. That's great.
I mean,
yeah.
And they said, well, what are you doing with your investments? I said, absolutely nothing. I'm fully prepared for this. I'm letting it ride. I did nothing.
Yeah. And you're okay.
And so we've doubled and tripled since then. I mean, so you build a portfolio that's has enough diversification. It can really be in many ways. And again, I'm simplifying a little. Portfolio construction matters, but for the most part, it can be set it and forget it.
Thank you for sharing that. I really appreciate it. You also mentioned Profit First. I have shared some thoughts on Profit First in the past. What made you want to become Profit First certified, and how do you think that helps business owners?
So interestingly, at one point in the beginning of my career, so in my 20s, I found myself, and I'm going to get to the answer to your question, but it's a meandering path. I found myself advising multimillionaires what to do with their investment portfolios during the day and coming home at night to a stack of bills that I would not pay because I couldn't afford that. I didn't have any money. I was an overspender, right? And so I figured out that everything I knew about investments and the economy didn't make a difference. I mean, I spent myself into oblivion, and that's how I really became a student of neuropsychology. I really got into my own money psychology, and I developed a system to pay my bills automatically. So I forced myself to pay. Once I had sort of locked in all the debts, I forced myself to pay by creating an automation system in my personal accounts. And then someone said, oh, you should go read Profit First. So I did. I read Profit First maybe 17 years ago or something, said, oh my gosh, I should have wrote the book. And then, as my company, I founded my company and we got more into working with business owners to do profits consulting. I don't do bookkeeping. We were sort of teaching Profit First anecdotally. And so it really only made sense to become a Profit First certified professional. So we work with their systems. They do have an amazing tool that allows us to work out the percentages for business owners to flow to each of those accounts. it's a name that's recognizable by people. So we love to help our clients clean up their account management practices and then hand that over to their professional bookkeepers.
So for somebody who's never heard of Profit First, can you just spend 30 seconds what the hell even is Profit First?
Yes, it is like an irrigation system. So if you have a garden with plants and flowers, you want the irrigation system takes the water out to the plants that need it instead of on the cement where it just evaporates, right? Profit First is the same. It takes your money automatically based on predetermined percentages to accounts that pay for the things you need to pay for. So as a business owner, operating expenses, payroll, your own compensation, whether that be payroll compensation or profit distributions, and taxes. So imagine many of you listening, every March, your tax preparer says you owe $100,000 to Uncle Sam. And for many of you, that is a financial emergency, even though it's been coming.
Definitely is.
All year.
There is no surprises. We know it's coming every year.
I know. And so with Profit First, just like the other things your business needs to pay for, you're ready for that tax bill because it's been accumulating all year based on a predetermined percentage. You and your tax person know what your effective tax rate inside your business is. And so we're ready to write that check. You can pay Uncle Sam in cash. Not only that, the other big thing is and you know this, Danielle, most business owners do budgeting by bank account balance. So do I have enough money for this engagement? Can I pay that consultant 25 grand? Oh yes, I have $150,000 in my account. Well, it turns out you've triple and quadruple allocated that money. Mm-hmm. And now you're in feast or famine, right? And so Profit First prevents that by making sure all your bills are paid before you can seek. Mike Michalowicz is the author of Profit First, and he likes to talk about Parkinson's Law. Parkinson's Law says everything expands to fill the space that you give it. I know if you think about many of you listening, your spending matches that. You want to know if you have enough money to pay for something. What do? You open up your bank account. Well, that's not an effective way to budget.
No, it definitely is not.
Yeah. And then we do the same thing in personal accounts. So we do that irrigation system throughout. So you're saving for Christmas or Hanukkah spending, your next car, maybe a down payment on a house. And then what's left over after you pre-allocate to your retirement savings is your spending.
Have you heard yourself saying, I'm scared to invest money in my business because what if it doesn't come back? I don't know how much to pay myself, so I won't take a paycheck yet. I'm reinvesting in the business anyway. Or how about, I'm not going to spend any more money until I know exactly where my money is going. Well, let me tell you, you are not alone. In fact, we have heard all of these stories and more throughout the last 9 years at Kickstart Accounting Inc. And that is why we have created the Money Mindset Mastery Framework to finally unlock and overcome these stories, to finally feel confident in your financial decisions and pay yourself what you deserve. The first step to create a profitable and successful business is to first understand your money mindset. Find out your money mindset personality type by going to kickstartaccountinginc.com/quiz. I can't wait to hear what your money mindset type is. In the accountants and bookkeepers that you've worked with, I shared this with you before we hit record, we have found that a lot of clients who come to us that say, hey, I've implemented Profit First. Do you know what I'm talking about? And there's so many tax accountants and bookkeepers out there. I see them when we go to continuing ed. So my CPEs, when I go to these events, I've heard several people talk about Profit First. And so I'll be in a large room of tax accountants and the speaker will say, how many of you have heard about Profit First? And I am one of the only ones to raise my hand. And I'm shocked that more accountants have not embraced this. Have you had that experience? Have you seen that? What are your thoughts around the reluctancy of the accounting field to allow for it?
I have tax accountants undermine my advice semi-frequently. So there are ways in which we are at odds. I do think that tax accountants are trained to prove their value by saving taxes, regardless of the overarching goals of the investor. So let's put a bunch of money in this tax deferred account so that you can lower your tax bill when the client's goal is to save money for the down payment on a house. And I'm going, what are you doing? Or the tax accountant will say, why do you have all these accounts? Just close them and use a spreadsheet, right? Because Profit First requires a lot of accounts. I personally have 8 bank accounts, 8 for business and 4 personal. And I like it that way, and I'm not changing. But they don't take the time. To them, it's a cost. They don't like to see the $6.50 per account charge from the bank.
It's a lot for them to manage. Like, why do I have to, like, I just see people get really confused with all the transfers. Like, why are you transferring all this money? It's more work for me. And we're over here like, yeah, transfer the money, please. And I think it's unique because we're focused on management first. So everything is about, let's manage the business. And so all the advice, all of the concepts that we talk about, everything that we do is managing our business first, paying taxes second, right? Because we don't want to be spending all of our money. I mean, I agree with you. There's nothing worse than hearing a tax accountant say, go spend money. You have too much profit in Q4.
Oh, this is heinous to me.
Right?
You hit this advice in December every year. Oh, here's something to spend your money on. I'm going, what?
So irresponsible.
Let me stand on the corner with a bag of money and an incinerator.
Yeah. I mean, we had a client last year who was with another tax accountant. The tax accountant told them to spend a bunch of money November, December, and she wanted to open a retail shop. So then when it came time in March to start building out the retail shop, she had to take out a bunch of loans. She had taken out all of that money. She had spent it personally, and now she had no money to actually make the investment that her business wanted to make. So it is definitely very irresponsible. And so we don't have to blindly listen to our tax accounts. I think that there's a real benefit of having your teams come together.
Well, and I've worked very, very hard, specifically in my firm, to find tax people that I can refer to who understand how and why we do business and aren't going to fight me on that. Because ultimately, when you take a comprehensive view, the goal of each individual human being is to grow their net worth. Now, yes, saving on taxes, but not at the cost of living the life they want to live, right? You have to earn money and pay tax in order to have it. That's how you earn personal income, right? Every dollar you spend in your business is a dollar maybe 50 cents or 70 cents, you don't get to spend in your personal life, right? And so ultimately, if you're going to be a high net worth individual, you pay high taxes.
Yeah, taxes are a part of doing business. And I think what we're saying is, if you hear opposite, it's probably gimmicky. This is the tried and true, right? I don't believe in a lot of gimmicky things around here. The basics that have worked for hundreds of years are the basics that I'm going to continue to preach, and there's a reason behind it. I don't want to be clickbait for anyone. So.
Well, and I do think the desire to not pay taxes is definitely a hook people can use to get sometimes fraudulent clause in you. So yeah, I didn't know you also felt this way, but it's something I see and I feel very wary of it.
Yeah, me too. All right. So you touched on wealth a few times. And what we see with our clients and our listeners is as their business grows and they're finally making more money from their business than they ever made from their 9-to-5 jobs that they left, for the first time, they're really thinking about, how do I use these profits in a meaningful way? How do I actually start to create wealth for my family? A lot of our clients and our listeners don't really know what that means. So what does that mean to you? And what really differentiates that business owner who's willing to strive for that and take actions towards that?
Gosh, that is a big question. Let's see. So I think the most common thing is, like, first of all, let's just acknowledge and kind of start from the beginning. Most people, for most of you listening, nobody took you aside in your teens or your 20s and said, this is how you build wealth. And honestly, to your credit, like, I just want to acknowledge it's true. Most of us are very disadvantaged when it comes to that information, and it's not our fault. But we got taught bad lessons by our parents, and they got taught bad lessons by their parents, because most of our grandparents are depression babies, right?
Yeah.
Right. And really, we're the first generation that's like living long enough without a pension from some cradle to grave job that's going to pay for our retirement. Social Security was never intended to pay for our our retirement years. And so we're having to figure this out on our own. So I think the first phase is business owners are like, something they're like surprised to be making money. It's like, oh my God, I made more money. And then they don't believe it for a couple years. So they let the cash build up in their bank accounts. It's probably a very boring conversation to talk about the different retirement accounts that you can use as a business owner. But honestly, get with your tax person or your bookkeeper, because these are some of the biggest tax benefits Congress affords us: the ability to contribute to a 401k or a SEP or a solo K or a simple, right? This is your first job as a business owner. When you have surplus income, you want to defer the max into a retirement account. And then after that, you're looking at building up assets in a taxable account. So you pay the ordinary income tax and you invest it in a brokerage account. We've talked about kind of how to invest. Yeah, so it builds up slowly, but then the benefits of compound returns happen quickly. So it feels slow in the beginning.
I want to pause on compound effects, because not knowing where to get started is usually what gets people from starting at all. So I think the idea is start, right? Like, don't wait until everything is perfect. Like there's perfect conditions and you're all organized and everything is just right. And now I can start. Like, you got to start now so you can tap into that eighth wonder and that compounding effect, right?
I mean, I felt like, and it was terrifying for me when I was first in business. I think my first year in business, as I recall, I had a SEP IRA. And then my second year, I was able to do the solo K. And then I had an employee, so I had to switch to a simple. And then the fourth year, I did a full 401k. And I did that because I thought, I am a financial advisor. I have to do this. But it was still terrifying for me. I had never done it before. I didn't have any experience with it going well. I mean, I was sort of feeling my way around in the dark. I knew the rules, but I was like, okay, I'm just going to throw some money in here. Right. So
thank you for sharing that. I think that's a helpful vulnerability for people, that like, you didn't have it. Like, I'm so confident going into this, right? You did it though.
Yeah. Yeah. I mean, I think we all feel a lot more comfortable when we've seen it done and we've seen the full life cycle of a thing. And the truth is, you know what, in a pinch, if you have to, you can pull that money out. I mean, you can put it back in 60 days with no penalty. You can pull all your Roth IRA contributions out, not the earnings, without tax or penalty. Like, there are ways that money is not permanently off the table, but it is important to be like a squirrel, preparing for the winter, putting nuts in the tree, right? Because I think we forget that unless you're going to have a $10 million or $100 million exit, you have to still build up your nest egg while you're working. And running a business is hard. Having a family is hard. Doing all the things is hard. And so as much as you can use that principle of nudge, right? Just set up those contributions so that they're automatic. And, in the beginning, go less than you think you can afford, right? You can put, I think, 22,000 in a 401k this year, maybe go 15,000, right? I mean, I'm just making it up, but the point is, make it bite-sized and then increase it next year. Right. And those kinds of behaviors pay off. I'll be honest. I mean, I only look at my 401k contributions when they tell me my W-2 is ready. I get an email from, what is it, Gusto? Gusto does my payroll. Yep. And I go in and go, oh, am I contributing? Oh my gosh. Oh yes, thank God I am. I mean, I forget. Life is busy.
Yeah. So, you don't have to obsess over it in order to be wealthy, right? Just like we're not having to time the market and buy and sell. You don't have to be obsessed with this in order for it to start to accumulate and compound for you.
You don't. I mean, I think, and you didn't really ask about this, but I think on a values principle, I did want to set up that 401k with matching for my employees. That's a point of pride for me. And I think, if you're a business owner, it can be a recruitment and retention tool. I mean, that's a big benefit that you're offering to people, is to help them. And you as the business owner are supporting their financial future and success.
I don't want to let you go without touching on money mindset. I know that that's something that you are really passionate about. So talk to me a little bit about why you're so passionate about money mindset. And I think that this term does get thrown out and around a lot. I think there's a lot of buzz around mindset. I know I've seen it from a very specific place. I'm always very surprised when business owners who are clients, especially that have organized bookkeeping, they're receiving their financial statements, they have all the information, and then they still avoid their money team. Like, they still avoid the topic.
Talking
right?
to you?
Yeah, they avoid
Uh,
talking to us. They avoid meeting with us, and I think we're pretty damn friendly. We watch them do it to their tax accountants too.
right.
So we watch them still have a lot of avoidance. And I've really come to understand that this is a money mindset and that we've carried so much of our experiences from life into our business. But I want to hear your take on
Yeah.
that and what you're seeing with your clients in terms of money mindset.
Yeah, it's a big topic and it really is multi-pronged. So to address what you just said, we really don't have a culture around talking about money, right? And maybe it is a first world privilege to be able to talk about money, but we live in the first world and not talking about money really disempowers us. So we have a saying in my profits consulting program, handle money first, right? I never understand because when someone in my team sends me an email about money, I click on that one first, right? And I make sure to get that handled. Like money runs the day. Ultimately, if I don't have my money handled, I don't make payroll, I don't have a business, right?
Yeah. Yeah.
Um,
I mean, we're too busy doing an Instagram post or
but why are you
chasing.
doing an Instagram post? It's so
Right.
you can make money,
Right.
right?
Take care of your money. Where's your money going? I
Handle
agree
your
with you.
money first. And it comes down to a lot of people talk about it and I think they hand wave it. It's very much like sort of airy fairy, like, oh, just have thoughts of abundance. And it's
Woo-woo.
really irresponsible, I think, to do that. I don't think that affirmations work for most people. Ultimately, we just
Agreed.
stand in the mirror and talk to ourselves and we'd all be skinny and rich, right?
Yep.
I mean, really.
I know my son would be going into the NFL and yeah.
My
Yep.
husband would be 6'4".
Yeah.
But there are ways to alter your brain patterns about money. And this engages the science of neuroplasticity. So neuroplasticity is the way the brain can change over time. You have the experience of changing your mind and thoughts, perhaps about politics or about your parents or about, something in the world you've changed your mind about. And you can do the same about money. And what that takes is time, recurrence, and environment. This is the model or framework for biological change. And so the idea of money mindset is you got born into the world with a particular money experience and particular money lessons. But those are probably just a small set of the possibilities that money really is. Like money really is this blank slate that you can use to create, the life that you want. And so I love to not just talk about money mindset, but really sort of dig into it with people. So something actionable for your listeners, if this is a topic that is interesting to you and you think you might have an upper limit problem as it regards money, sit down and journal out your thoughts about money. What do you think about money? What do you say about money? When you open up your bank account, what is the thought or feeling that's right there? I bet it's consistent, right? You don't have wildly different thoughts about money, right? For example, I used to have the money mindset, there's never enough money. When I got paid, in order to manifest there's never enough money, I had to spend it all. That's what we call being an overspender. That's where that phrase, money burns a hole in her pocket, that's where that comes from. That was me. And I got to rewire that over time. And now I love saving as much as I used to love spending. And I still get to spend because I earn more. But it's just an example of kind of the true depth and science of money mindset, money psychology, and what's possible there. And, it takes effort, just like it takes effort to learn how to play Beethoven on the piano, right? But it's worth it.
Yeah. I think we have to heal our mindset, right? Like heal that trauma, right? We might have seen something, heard something, forgive. Absolutely. And then decide, right? Like decide that we're going to become a numbers person. We're not going to avoid our money team, the people who are trying to help us implement strategies and tools in our business. I really appreciate you sharing that. Is there anything that I haven't asked you today that you wish I would have, or anything you want to leave the audience with?
I have a free giveaway for your audience, if that's okay.
Of course.
I have for you a profit potential assessment. So in this assessment, it's 12 questions. So I need you to muster the stamina to get through 12 whole questions. But on the other side of that is our best thinking delivered to you in a customized guide for where you can go to work in your business conceptually as the business owner to produce more profits today. I'll give you the link so you could put it in the show notes if you want. It is moneyblueprintprogram.com/profit quiz.
Yeah, I love it. My mission in the world is to help women business owners create healthy, sustainable, profitable businesses. And Hilary, I really appreciate you being so aligned in that journey and
We're
helping
very
women create
aligned.
profitable businesses, because that is how we have the opportunity to make a difference in the world.
Love it.
I hope you enjoyed today's episode. Hilary is a wealth of knowledge, as we joked about. We could have continued to go on all day long, but I respect your time too much. But if you enjoyed today's episode, I ask for you to do one thing in return. I would love if you could like and subscribe and share this podcast episode with one other person who can use this information. I am looking forward to our podcast next week. We'll see you there.